I called this trade out and I was in calls for about the past week. I closed it out before this news today, but I want to explain, number one, why we were watching this trade setup. Number two, when the time to get in this would have been best. I want to talk about looking back into November and October of this year and talking about this big push off of earnings, how we could have potentially entered there. But more importantly, I want to give you guys my analysis on where I think Intel can go from here. Because if we're looking at the 4 hour, yeah, we're up a lot. We're up about $50. But if we really zoom out and we look here at the weekly chart, you're going to see that we're still very far from all-time highs and we still have a lot of room to cover. So there might be some meat on the bone when it comes to those of you who want to look at this from a long-term standpoint. I wanted to get access to the trade. I actually did call it out free on my Twitter/X account. So go and follow that. The link is going to be in the description. And I kind of use this as a compendium to all of these videos because updating you guys on real-time stuff here on YouTube is very tough just with how the platform operates. So let's take our replay function and we're going to go all the way back to earnings that happened in October of this year. The indicator that we're going to be using right now is a proprietary indicator, which you can get access to in our Discord community. It's the second link in the description, or you can just use any smart money concepts indicator. There is one that's free in TradingView by Lux Algo that you can just type in smart money concepts and you'll see right here, Lux Algo. And what we're doing here is we're really just watching for the overall trend and we're watching for major buying and major selling. Indicators are great, but what we're really looking for is the orders because we can't move the market. So we need big money, AKA people with a ton of money, whether it's hedge funds, market makers, etc. We need those people to step in to actually move the market for us. So we want to be trading alongside of bigger amounts of money. Now you can see that going into earnings, there really wasn't any buying. There was a couple of liquidity levels sitting here, which are good supports, but everybody was waiting until that earnings release. Once we get that earnings release, big break up, and this is not quite the time to go long. Well, as we're consolidating now, we come down to the support level of $37, and what we're looking for is the push over $39. That's the major pivot level. So for the sake of this example, we're just going to do 1,000 shares since this is obviously fake, and we're doing this in replay. We're going to watch for that breakout. There we go. And we're going to purchase into this with 2 buys. The reason I do this is I like to scale out of my positions. We're going to see if we can test $40. We pull back, push up, here we go, and we get our first move up. And what we're going to look for is our first signs of potential weakness. This red pullback here is our sign of weakness. So we're going to sell 1,000 shares. And now that we've covered and taken 1,000 shares off the table, think of this just like gambling at a casino, but very methodically. At this moment, we can stay in this trade, play the upside since we have a lot of buying and we're in a big uptrend coming off of big earnings, and we can just allow the trade that we have to fully play out. So we're going to see what ends up happening. We're squeezing between our 2 pivot zones. We see this pullback. Once again, we're waiting for this push up to make this higher high, which we're getting here. Very good that we would have held. And now, since we're through this breakout, we're watching for first signs of weakness to sell off maybe another half of our position, another half of our shares. There's a big potential for that. So what we're going to do is allow this to play out. But at this moment here, this is definitely where I would have closed my position entirely. And this is where I actually closed my calls that I had last week. But then we get the news over the weekend and we see Intel run another 6.5%. So the first thing I would say is that even though I'm out of my calls, I would not be shorting this. If you're somebody who is looking to short this, please be careful. You can look at companies like Nvidia, many other even semiconductor companies, or just companies in general that people thought were overvalued in the short term. And I've seen so many people lose money trying to bet against the trend. Now, with that being said, if you're somebody who's in a trade right now, my personal recommendation would be at least taking a good portion off the table. If you got in where I got in down around here, 45s, I'm entirely out, but I would at least be taking some off of the table. When you start to take profits off of the table, yes, it sucks because you're missing out on some potential profits, but you're really pulling down the amount of risk that you're bringing to your overall account. And what I've noticed as well for a lot of my students is that it actually allows them to trade a lot clearer because number one, the trade's a winner and they're a winner already. So once they close that profit, they get the dopamine, they get the feeling of being a winner, which instantly makes them more confident. And the second thing is that it just allows you, since you're trading with less money, to just be patient and let the trades play out the way that they have to, as opposed to reacting to every single up or down tick. So I hope this video helps, guys. Let me know what you think about Intel going into the next couple of months, and I'll see you guys next time. Peace.